exclusively based on technicals, but we will cover some of those concepts that traders might choose to utilize here.
It looks like we're not going here, Kev. I don't know.
Yeah, I was waiting. There we are. Looks like we got us up and running here. There we are.
Yep.
All right, so we are in, everybody. So just briefly remember, conversation is informational and educational, not making recommendations nor endorsements. We encourage you to make your decisions in terms of trading off a multitude of factors, not just technical analysis. Beyond that, make sure you're following the three of us on X. Barb Armstrong CS is in the chat. You can follow Brent and me there as well. Brent Moores CS and Kevin Horner CS, and we would really appreciate a follow there, of course. As far as our agenda is concerned, everyone, it'll be the same process. We do incorporate a top-down methodology as we look at the market. So we'll start with the broadest of indices, work our way into the sectors on the move, and we always hit up stocks in the news. So plenty to cover for all of you today. Let's start us off, Brent, with that S&P 500. Guess what? That's a new all-time high, sir. I mean, what else are we going to say other than maybe don't fight the trend?
Don't fight the trend, and yeah, new all-time high, S&P 500. You mentioned the Dow. I'm not sure people heard that earlier, but yeah, we do have an all-time high on the Dow. That's a 20-day moving average in the orange there.
Yep.
It's been hanging above that for a while, and we'll see how the day progresses. It is interesting because, Kevin, really, like this morning we had a PPI report that I think most people would consider to be fairly favorable. However, over the past week, we've had some economic reports, specifically some labor data, that hasn't been very positive, yet we just keep trucking along, and so that's what we're seeing. I don't know, is the response, is the SPX a response to more positive interest rate odds of an interest rate cut? Is that why we're going up? I don't know, but all we know is the market trend is strong, and those people who kind of have the philosophy of the trend is your friend and we're going to follow along with that have been rewarded of late.
I think that's essentially the takeaway, Brent. We've been talking about maintaining trend for a long time and how we as traders can choose to be bearish at certain instances, even in the midst of an uptrend. But you don't have to take bearish positions in order to be bearish, as I've often stated. We can take we can actually stay bearish, that is, by reducing position size, building cash, etc. Yeah. And when we look at what's gone on with the SPX, we've had this bearish divergence as it relates to RSI for some time, Brent, and yet it has not led to the deeper pullback that many traders would tell you has to happen when you get a bearish divergence. But Brent, we've learned that's just not the way the market works, is it?
Yeah, every time I've talked to you, Kevin, about a divergence on an RSI, or you can use divergences on other things. I see people use divergences on balance volumes or MACDs or other indicators. You've always been very forthright in saying this is not necessarily a sign that the market is about to turn bearish. It may be kind of a cautionary flag, but it's not an impending turnaround necessarily. So, and this is just a case in point here in this case. Now, who knows? I mean, this may represent the very high of the market, and we may just go down from here. But it is a good note that when you have data, when you have indicators, it's more of a holistic view rather than any one indicator, probably.
It's a good way of thinking about it, Brent. And we could also go with the KIST method as well here, couldn't we?
Yeah.
Keep it simple trader, which essentially says you've not had a break in the trend, so why would you do anything different? If you're trading the trend, a lot of traders doing so just stick with it holding positions by and large until that trend changes. And how you define that trend for each of us is really where we make our bones, right? I mean, as you're a trader watching the 20-day moving average in the SPX, you've had limited reason to be a seller of the SPX since April. If you're a worker against the 50-day in purple here, you've had next to no reason to be a seller. So if you're working with those viewpoints of just monitoring the trend, I will sell when weakness comes into the trend, then I will determine what to do thereafter. You've not really had a lot of reason to do that. So many traders trading the trend have stayed the course, but what matters more than anything is your own comfort as it relates to your portfolio, the amount of exposure you have. Don't get bogged down by believing that the market has to do anything, as the market's going to do what the market's going to do. That much we know for sure. Okay, one other note. I did want to touch on this very briefly as it relates to the that PPI figure today. Evidently comes in a little light. Comes in at 2.6% on a year-over-year basis versus the estimated 3.3. And I think that's why we're getting this continuation lift today here, Brent. And you can see, a new high in the SPX. The NASDAQ 100 now moving to an area of resistance. My white line basically is the all-time highs, Brent, and we're dabbling with a breakout in the NDX here as well.
Yeah, we sure are. Regarding that PPI report, I would say the same thing for that economic data as I would for what that I mentioned with like the divergence, and that is we're going to take a more holistic view. Any one report isn't necessarily going to change everything. But having said that, it was a lower inflation report. And if there was ever any doubt, and I don't think there was any doubt that the Fed was going to look to lower rates in September. I guess it's not a guarantee. It's not 100%, but the market seems pretty convinced that rates are going to get lowered. But it's not. It doesn't just speak to this September potential rate cut, but also future monetary policy going forward later in this year. Are we going to get subsequent cuts? And each report that shows less inflation gives the Fed a little bit more free reins to have to lower rates going forward here as well. So I think, and the market generally likes that. The market generally likes lower rates. And so that's what we're seeing right here, I think, on that. I think that is probably why, though, immediately today, we're seeing the higher market today.
Yeah, it's one of those difficult dynamics to really digest and figure out, because if inflation is coming down, well, then suddenly the Fed doesn't need to act as imminently, right? And so you've got to balance out, how is the market going to react to this? Do we really want rate cuts? Do we not want rate cuts, right? Is the health of the economy the more important thing, or is it the action of the potential action of the Fed? It forces us to make a call, so to speak, 100% of the time as to what matters most. And really, we could just follow price action and kind of lean into that. We're going to look at rates here. In fact, Brent, I don't know that there's a lot more to share about the NASDAQ 100 other than we're still at that range, the upper level of said range. Let's see if we can get a breakout from that range, obviously, to the upside. Would be tremendous for the NASDAQ 100. But let's see how the Russell is acting today so that we can look then at rates as well. And we always like to talk about the Russell and then the relationship with rates. While the Russell and the small caps, Brent, continue the onslaught, running higher. And I would define what we're in the midst of in the last 3 days as building out a bull flag. But what about you?
I agree. I mean, of all the indexes, I mean, the Russell has lagged for a long time until very recently. And you can see, whereas we were talking about all-time highs on the SPX and NDX, the Russell, we're not at all-time highs, but boy, we're sure making up for lost time right now on that Russell. You can see that, whereas we had that divergence on the RSI on both the S&P 500 and the NASDAQ, we didn't have that on the Russell of late, just showing the more strength in the Russell of late. And I think part of it is just, when something gets beaten up more, it has farther that it can recover. And so it has been recovering more. but just like any other trend, it's not guaranteed to last, particularly if the market, if we do see a recession, the Russell could get hit fairly hard. But right now, the Russell is responding, I think, both just to the extent of how much it got beaten up, and a more positive interest rate environment is probably helping the Russell as well. And so that's what we're seeing.
I think you're absolutely right. Again, we can lean in, Brent, to the basic concept here. Let's not fight against what we're seeing, right?
Yes.
20-day moving average. I'm called out with the most recent test at the 2315 former breakout. Let's see about rates. So rates are dropping still. I say still. Essentially, we have traded through the most important level, I think, Brent, which was that 4.2. And that's led to the lift we've seen over the last few days here, I think. But what it looks like now is more of a move lower, Brent, a continuation. This looks like a bear flag setting up. Notice how in the last 3 days, we've been incapable of trading back up above that 4.1 zone. And that today it seems to be acting as some resistance. If we start making new short-term lows and yields, we could see the Russell run even further.
Yeah, it's been a long haul. People have wanted lower rates for a little while. Well, we've got some lower rates right now. They've gone down from where they were. I don't know where, if they're going to continue down. Part of that's going to depend upon what inflation continues to be going forward, and what the health of the economy is going forward as well. And if the economy struggles significantly, then then rates may come down even more here on this. But we'll have to see. But right now we've broken through. I mean, that 4.2 level, as you mentioned, was a pretty significant support level on this. And just for anyone who's new here, when we say 4.2, this TNX CGI is the 10-year rate, but it's multiplied by 10 essentially. So you just got to move the decimal point over a spot essentially.
That's right. And then, of course, Brent, we like to see the view of traders' expectations, and so we'll use the third-party application here, the CME Fed tool. Again, this is not a Schwab page by any stretch, and we just want to highlight expectations and further that those expectations are just that, Brent. These are how traders who trade these anticipated moves are trading them at the moment. Anticipation is now nearly 90% likelihood of a cut of 25 basis points here in the September meeting a week from today. But if we go to December, I think the biggest shift you'll see here is that the cut now for December, by the end of the year, the expectation is for 75 basis points lower at 65%. And just take a look at where we were on that, about a week ago. It was only 43%. So the data we've received in the last week has led traders to position themselves in expectation of more cuts between now and the end of the year. Any other takeaways on that, sir?
No. Just one thing. The data over the last week have led to that on both fronts, both the inflation report today and also more weak labor reports, both push us more towards the likelihood of a Fed funds rate cut. And so that's what we've been seeing. But yeah, going out through the end of the year, 3/4 of a point cut. No guarantees on that, but that's what the markets are kind of.
That's exactly the takeaway. We don't know if that's exactly what's going to happen, but that's how traders are positioning relative to the Fed tool. And that's got to have some reasoning for some of the maintaining of the rally to this point. Let's see about those semis, which are up 2% today, Brent. This is a very positive development for the semiconductors, moving through to new highs. Brent, are these all-time levels again? Are we dabbling? Oh my goodness, we have just made a new all-time high in the semiconductor index, Brent. That's, pardon me for saying so, sir, that's not a bearish development.
No, that's not, because the semis have really led the market here over the past few years. When the market has been doing well, semis have done pretty well, and that's that's what we're seeing right now. So not a bearish development. You're correct on that. And so semis are a big part of technology, and technology is the biggest part in terms of sectors of the market. And so when semis move and technology moves, the whole market tends to move. I mean, you could have technically technology could move and the market could go the opposite direction, but it's very hard when such a big part of the market is going up for the market not to do well. And that's what we're seeing.
Yeah, that's and that again leads us into, we don't try not to fight against what we see as much as we can. So semiconductors breaking out. Let's remind ourselves of a couple of key components from the technical trading aspect, everyone. If we were thinking that we had this range, and remember a couple of the key concepts. We have an uptrend in place that developed this range, right? We moved up aggressively. Let me draw the line in, so I'll give you all some percentage moves. Basically, to the initial peak in here was in the neighborhood of about 70%, to the peak we made a few weeks back, about 74%. But the reasoning for the sideways consolidation is to digest that substantial move. Now that we've moved outside of it, some traders will just measure the height of the range and use that as a means of target for the potential breakout level, and that gives you the ballpark of around 6250. I'll remind you, of course, that price targets, whether analyst or measured move price targets, as I've just developed here for you, these are never guarantees to be achieved. But Brent, a possible way that traders might look at the semis and set some targets for the indices space here.
Yeah, it's no guarantee the stocks can get up there, but if you're looking to come up with a target, that may be an area where you do it. It helps to have these like guidelines to follow in terms of setting targets. Similarly to a lot of, let me make an analogy here. When you're looking at different technical indicators, maybe you're using an RSI or something else, it doesn't mean they're going to predict, exactly what the market is going to do. Or even a moving average. It doesn't mean that the stock is going to bounce off a moving average or something, but it gives you a spot. It gives you a kind of a repeatable, objective way about entries and exits and making moves that is outside of yourself, outside of your brain, which is, more susceptible to fear and greed and all those things. It gives you a more systematic approach to trading when you use things like that.
My brain is sure susceptible to such nonsense, Brent. I can assure you of that. Listening, I came up with this wasn't my idea, but somebody encouraged me to give my brain a name so that when it says things that are dumb, I can tell it that it's being stupid. And so I just, I hope nobody out there takes it as such, but I've named him Gary. And just so when Gary in my head tells me stupid things like the market can't go any higher, you need to be fearful here. Gary, shut up, man. I'm just going to follow my pattern. I know what's going on. Sometimes that can help us manage our internal voice a little bit effectively, Brent.
Yeah, my wife calls it Lily, and she says, when Lily is loose and going around. So just kind of objectivity is a way to be more consistent in your approach to trading there.
Gary, please know that is not a slight on you, sir. This is just me coming up with a name that I could yell at it when it says and think and makes these stupid comments in my head. And believe me, I have quite a few of them. So I'm always working to tamp my Gary down, not you, Gary. I promise. You're in a good spot, sir. So there was a question about utilizing the semiconductors. How do we follow the group itself? Never a bad way of going about it. You could always utilize something like the Visualize. The heat map is a fun way to do this. You can continue to use, if you want to visually see it, an easy way is just to open up things like technology here and just keep moving on down. You can look at semiconductors. And of course, I'm looking in the S&P 500 exclusively right now, but you could also shift that over to the NASDAQ 100 and do the exact same thing. Technology, open up tech, go to semiconductors, open up semis. If you want to see specifically semiconductor materials versus semiconductors themselves, this is a way, Rams, that you can do that. Hopefully that'll kind of open your eyes a little bit to the opportunities out there. And of course, you can utilize and incorporate Schwab.com if you wanted to dive even deeper into those spaces. So hopefully something that could be considered helpful. Brent, let's look around at some of the sectors moving on the move today. We know we could expect that if semis are breaking out, that we're probably getting a good move in the tech space. So let's start with technology, which is also broken out, at least from the consolidative move we saw over the last few weeks, months here, allowing the 50-day moving average to get caught up, and then today breaking the downtrend line with the trend, Brent.
Yeah, I mean, that's a nice little breakout there on IT. And so not surprising on that. And we had seen a little bit more weakness in IT of late. And, you know, kind of a little bit of a shift in the market. Now, the market has still maintained itself pretty well, just because even though this biggest component of the market wasn't doing well, most of the other components of the market were actually doing fairly well for a few weeks here. But this it's certainly a lot easier when we get a bounce here in this IT space or a breakout in the IT space. And so, yeah, that's what we're seeing. And, you know, one other thing here on this is, you know, we talked about semiconductors, but Oracle came out with earnings yesterday. And I was watching it when it first came out. The initial reaction, the first minute was down, which was kind of weird because then it just took a violent move up, and a huge move, which is probably helping boost the IT space here today.
I think it's fair to suggest we're going to look at Oracle momentarily when we get to stocks in the news here, everyone, in a few moments. But the interesting thing I've picked up when I looked at the movement in the sectors here is how tech is breaking out, but you're also getting the interest rate sensitive groups on the move, with utilities and real estate both popping today because of the yields continuing to drop, I imagine, Brent. So there's this is not all that common, to be quite honest. We don't frequently see tech breaking out and then also see support level bounces in utilities and real estate from an important areas, do we?
Yeah, like when you think of utilities, I think like that's a defensive sector. Yeah. Well, that's not, that's the opposite. It's the kind of the anti-tech in a sense in that regard. And if both are going up, well, you're gonna have a good performance in the market here. And you know, you can see real estate, which is what we have on the graph right here, is been, I mean, it's been kind of going sideways-ish for you know, a few months here now, but
sure.
Nice little bounce today.
But utilities, on the other hand, got a breakout and a throwback move to the point where I might even be able to just extend this line out to, you know, tomorrow, for example, and color that green, because that sure looks like a breakout throwback test of support to me at this point. Brent, what about you?
Yeah, that was a kind of a key level there. You can see just the number of times it bounced off that level before we bounced. And so it was kind of an interesting area. And you can see how much we had pulled back because that RSI hit all the way down near the 30 level. But it kind of, you know, looks like we've hit support. We'll see if that maintains. It doesn't guarantee we're going to maintain, but that is a strong bounce, a hold, if you will, I guess, on that. So that's a nice, strong little bounce we have there on that.
Yeah, we don't mind bounces, but I think the more important aspect is for us to understand why, right? If we can tell the story of why we see the bounce in utilities and know that it's likely tied to the continued fall in yields, where traders now are willing to take on a little bit market risk to get that improved yield through utilities. That's one concept that's probably playing out here. But Brent, another one that's probably playing out is the need for power as well as it relates to artificial intelligence. That's probably why we've continued to see a bit of a shift in what moves utilities, right?
Yep.
Down a little bit on yield, but possibly also rallying a little bit on yields falling, but also probably considering the need for power that AI is going to present in the decades in the future.
Yeah, clearly a huge change there on that in terms of, structurally in the economy, with AI is going to, can shift many things, and it can certainly detract. And we've all heard the narrative of industries being threatened by AI. But this is one that can certainly benefit from that. And just a reminder here on terms of rates and utilities, utilities, they do a lot of debt financing there. And so lower rates can certainly benefit them quite a bit.
Yeah, quite a bit. All right, Brent. So there's our biggest movers in terms of sectors. We are getting a big pop today in energy. So let's just take a peek here. This is kind of an interesting spot for a pop, being that we've been consolidating. Look at all of the confluence here, sir. We've got the 20, the 50, and the 200-day moving averages all right on top of one another. That tells us quite a bit of importance about that level at 660 or so, doesn't it?
Yeah, that's a potential support level. I mean, one moving average is a potential support level. When you get three together, that's a potential area of change, and that's what we're seeing right now. And we'll see, we're kind of right near the upper breakout point of the kind of triangle you drew there, the more pennant, I guess. And so we'll see where we go from here, but probably not surprising we had that bounce there. And furthermore, what we're seeing here is we're seeing the 20 cross above the 50. A lot of people would deem that to be a little bit more of a bullish sign. And we're seeing the 50 cross above the 200, or we're just about there at least. And a lot of people would deem that to be a little bit more of a bullish sign. Now, just because you get the cross doesn't mean it's necessarily just going up from here necessarily, but just kind of going back to those indicators, using indicators as signals, potential signals. This is a way to help posture yourself in the market.
Interesting move here, nonetheless. I wanted to comment on Gary. Just had to throw this back at you, Gary. Perfect reply, Gary. You can name your brain, Kevin. That is absolutely appropriate under the circumstances. I'm sure you feel attacked, and I don't blame you one bit. That's perfectly fine. I will let you have it.
Yeah, exactly.
Good on you, Gary. That's an excellent reply for us. Briefly, look quickly at materials, which is also in the green, bouncing off of the 50-day for moving average support, and then industrials continuing to consolidate, but holding a very important level that stands out to a lot of us here. Number of tests of support at around 1250 here on this index. So keep an eye on that, perhaps. All right, Brent, we talked enough perhaps about what's going on in the broader sense. Let's make sure we hit up some stocks in the news. Now, you led with Oracle, so we're going to go straight to Oracle. Let's pull that up, having a banner of a day up 40%. But at this point, the chart pattern doesn't really matter. But Brent, could we suggest that buying yesterday was a little bit of a heads up? Or, I mean, it's always dicey the day of earnings to validate volume as anything, isn't it?
Yeah, I would agree with that. I mean, anything can happen on earnings. No matter what the technicals are, earnings can totally just change the narrative there. However, having said that, we did have going into, in fact, could you zoom in a little bit here, Kevin, on that chart, just so we can see the more recent data there on that? Yeah, you can see this is the couple days preceding earnings, right? Breaking out of that kind of a descending triangle, almost breaking out to the upside on that. And even the day before, we had a higher volume on that. And so, some people were, some traders were posturing themselves as bullish on that. I've certainly seen it. People posture themselves as bullish before earnings, and then the earnings is a stinker there. But in this case, it certainly turned out well. And now, almost 40% here on this. That's
Yeah.
huge on a company. I'm not sure exactly what the market cap off the top of my head here is on Oracle, but that's a big move on a big market cap company there.
It really is. It really is. And it's not like it's been under a struggle at any point of late. The time spent on Barb's struggle bus has been fairly limited in scope. That candle on the weekly is absolutely a beaut. Notice now the 20-week moving average in green catching up to the former support. A lot of traders now will look to elevate any exit strategies to the gap zone and might just consider a gap level as an area for a new short or a new sell signal. That is to say, if they start to work their way under the low created with today's move, traders might then start to migrate out of some of their Oracle. But, again, gaps are important. They tell us a ton about sentiment. And the fact that this has exploded the way that it has gives traders an area to manage their trade risk as it relates to positions in Oracle. So that's an excellent move. We should probably mention that they were upgraded, if I'm not mistaken. So let me pull up my detail on that.
Yeah, that often happens when you get a big move like that or a big earnings. You get analysts upgrading. And to my prior point, market cap I'm showing as 950 billion, so almost $1 trillion company, up 40%. I'm not sure if that market cap reflects the move this morning or not. I'm guessing it does, but that's like hundreds of billions of dollars of of movement in the market, of equity in the market gained.
It's pretty incredible. It was Bank of America, by the way, that upgraded them to buy. Previously had been at neutral. New target here is 368, which is up from their former 295, stating that the report was exceptional, and they have good backlog growth in Q1. Visibility on their return on investment for growing their capex is limited, but the outlook for revenue alone suggests a step function in demand. And it's further clear that Oracle is capturing a share in the large and rapidly growing market for AI infrastructure. So I think we hit a number of key words in that statement from Bank of America, not the least of which, of course, is the AI infrastructure build out, which is clearly benefiting Oracle. So that's a fantastic move to the upside. If you're looking for a very short-term basis, we could always apply the intra-period charts and then just make note of the gap level. Remember, there's a difference here. This is where we were in the after hours yesterday. The trend continued all night, and the intraday open, basically, Brent, tested that same low level. This rectangle that you see here, that's the line that I drew in on the daily. So I think there's some validity here to kind of giving you short-term traders ways to set your own risk. Yes, if you're a longer-term trader who's looking at the daily chart and only concerned with it, you can pay attention to the low established with today's open, Brent. But there's a number of other ways you could look at this on an intraday basis and try to maximize your exit strategy a little bit.
Yeah, absolutely. So you can look at these intraday charts. You don't have to, but you can use them for some additional, for some additional guidance in terms of when to enter, where to set stops, when to exit or take partial profits, perhaps. There's all different ways to manage on that. And there was a comment in the chat from Bill. Bill had closed out his Oracle not long ago. And you know what? It happens to all of us, Bill. I've been there. And so you got to just move on, not worry about it. And, you win some, you lose some. And you didn't lose anything here. You just missed out on a potential opportunity on that.
Yeah, opportunity cost is one of those things that weighs on us as traders. We don't have to allow it to do so. I try to think about the things that I did with those funds. So, yeah, I didn't hold my Oracle position, just as an example. For the last 2 weeks, I sold out 2 weeks ago. I didn't take advantage of this move. But what did I do with that money while I was out of Oracle? Was I buying up big moves in other stocks that brought me profits along the way? whatever you need to tamp down those emotions along the way and tell that voice in your head. Again, you can call him Kevin if you want, but tell him he doesn't know what he's talking about, because you got a plan, and your plan is more important than any of that emotional nonsense that voice in your head is giving you. That's not the way to trade. The way to trade is to try and stay robotic, eliminate emotions along the way. That's a big benefit to the trader. If we can kick those emotions to the curb, chances are we're doing a better job of trading in the first place. So, all right, Brent, let's take a look at another one that was upgraded was Nike got an upgrade. Now, I'm bringing this one up because the chart has been a little different here. Now, there has been a consolidation and just sideways. It's really just trying to figure everything out since it made this big gap move. But Brent, when I look at this, I actually look at all of this action in the rectangle as a positive, and the reason being because of the way we came into this trend. If I added a year of time to this Nike chart, what stands out to me is this maneuver right through here. The fact that we broke the downtrend seems to be the most significant development in the last year and a half or so. What do you think?
So that was a big. Nike has struggled for quite a while, and they're trying. Looks like you. Sometimes when you get knocked down, I guess I don't know, boxing analogy or something here. You get knocked down. The initial response isn't necessarily you need to all of a sudden start winning the fight, but you got to get on your feet and kind of give yourself some time on your feet here. And I think establishing this new level here is them getting off the mat, so to speak, and the negative just kind of cavalcade of bad news and narrative. Maybe they're starting to flip the script there a little bit on that. And so we're in a new channel. And the good news is we've stayed above that channel. That $70 level looks like a pretty strong support level now. Now, strong support levels can get broken, especially on earnings. And you can see the earnings on the graph coming up. But right now, that coincides with about the 200-day moving average as well. That's probably a pretty strong support level. That's the first step here.
Yeah, I think so as well. The location, I'm glad you mentioned this, Fitness and Nance. The RSI on Nike is diverging in the sense that we made a lower low, but we haven't made, I don't know that I would call it diverging necessarily. I think the takeaway that I would have is the fact that the pullback has been into that appropriate zone where some traders in the midst of a new uptrend would say it should find support, meaning we shouldn't get the RSI into legitimate below 30 oversold conditions if this is in fact a new uptrend, and it's still in the process of defining itself, I would say. The headline, just so we get the details out there, TD Cowen upgraded Nike to buy from hold. New price target is at 85, which is up substantially from previously at 62. And the firm says they see three reasons for a potential Nike turnaround. Their margins have already troughed. New management's execution and their recovery is a little bit underappreciated. And then they're also stating improving Nike and Jordan trends according to their own field research. So that's all positives. The interesting thing is that the chart isn't yet necessarily aggressively uptrending, but that stood out as a possibility for something to keep an eye on based on all that. Now, the other thing that I wanted to get to in our final minutes here, Brent, was Apple, which had its Investor Day yesterday. Of course, we had the big reveal on the new iPhone. I think it's the 17, and we had some analysts making some adjustments. So Evercore raised their target from previously at 250 up to 260, maintained an outperform. JP Morgan said there is still modest upside here relative to favorable pricing for the iPhone. They did not make an adjustment. Bank of America did make an adjustment up to 270 from 260, and then Melius from 260 up to 290. All of them maintaining levels on Apple. But Brent, just curious, this is not an uncommon move in your eyes, is it, on Apple following the Investor Day?
No, I think people go into Investor Day with very high expectations of what, because there's been times in history where Apple has just kind of blown it out of the water, so to speak, in terms of product releases that were kind of game changers and whatnot. And if you don't really impress, then people walk away very, they tend to be have a pretty negative reaction. So that's I could tell yesterday listening to. I'm not an Apple aficionado by any means in terms of their products and gadgets and whatnot, but I could tell from those who were, they were not very super impressed here and so I'm not really surprised by the overall market reaction here on that.
Yeah, probably not. I mean, it would take a pretty substantial announcement, I would think, in terms of developed new toys for Apple to get a big pop on the day. But,
Yep.
Didn't play out quite like that. We'll see. Maybe this is just a 20-day support test. We haven't been below the 20-day since back in early August, so it's been about a month. Maybe this is a rally spot, but keeping an eye on the 20-day, some of you might get a little uncomfortable in Apple under the 20-day for the first time in a month. Maybe that means we got to test the bottom of the recent range at around 225. That should give you something to eyeball if the selling does continue, in fact, here. So
Yeah.
I think go ahead.
Oh, I was just going to say, I wouldn't take this. My initial reaction is this chart isn't like a super bearish chart by any means, other than in the real short term. Short term, we have some strong downward momentum. But if you look overall the last few months, for the most part, we've had a nice little uptrend there. And that I wouldn't say that's necessarily broken at this point either.
Yeah, I agree. Not necessarily broken. We still have higher highs, higher lows, and higher highs along the way. And I just put that oval at the 220, 221 level. That's the approximation of the potential 50 crossing the 200 to the upside for a potential golden cross here with the 50 crossing the 200. So we'll see if that comes into play as well. I did want to answer Daniel's question. Yes, we do host Trader Talk actually 4 out of 5 days a week. Right now it's Mondays, Wednesdays, Thursdays, and Fridays, but we will be shifting that a little bit going forward. I think we're going to see more of likely a Monday through Wednesday and Friday situation, but nonetheless, 4 days a week with Trader Talk. The majority of those, 3 out of those 4, we do archive for you. So check out the YouTube page, Trader Talks, and you can scan the Trader Talks page for the archive of this class, so you can see if we know what we're talking about. I mean, ultimately, what we talk about here, Brent, is just trying to monitor the trend and keeping an eye on the stuff that might change on a day-to-day basis. But I hope that our traders are taking little nuggets of wisdom, not to mention some comedy every now and then.
Yep, we're here for you folks. I hope to see you each morning, starting your day off with some trader talk in the markets here.
That's the whole idea, everyone. So thanks for being here today. Big thanks to Barb Armstrong in the chat. Like I said, you can follow the 3 of us on X. We would appreciate that. Barb Armstrong CS, Brent Moores CS, and Kevin Horner CS. And if you like the conversation, hit that thumbs up button for us below. That'll help us out a bunch as we get this archived and back on the channel for you all. Up next, we have a follow-through conversation after Trader Talk today. So next is trading index options with our man Ben Watson. So that'll come at 11 a.m. Eastern, so just around the corner here in about 45 minutes. But thanks for being here, everyone. Have a fantastic rest of your Wednesday. We look forward to catching up with you all again real soon.